A chart of accounts with 7 or 8 revenue buckets is useless if every payment lands in a single account called income. The buckets only pay off when each transaction gets sorted into the right one on the day it arrives. The work is small per transaction, 30 seconds to pick the right account from a list, and the work is large per year if you skip it. Several hours of year-end repair, plus a conversation with your bookkeeper about why 80% of your revenue isn't uncategorized. Categorization is the daily act that makes the chart of accounts from Module 7.2 actually work. 30 seconds per transaction, performed consistently on the day the payment lands, builds revenue reports that tell you which products are earning and which aren't. Skip it for 10 months and you have 10 months of payments sitting in a generic income line, no signal about product mix, and a several-hour repair job between you and a clean Schedule C. The pattern that works is small and consistent rather than big and occasional. Same decision, same day, every payment. The coach-specific revenue buckets from Module 7.2 are distinct for a reason. Different delivery economics, different pricing, sometimes different tax treatment. One-on-one coaching, group coaching, coach training and certification, supervision, mentor coaching, online courses, speaking and facilitation, consulting. Each of these is a different product with a different cost to deliver and a different growth lever. Mixing training revenue into a generic coaching bucket means you've lost the signal on which products are scaling. For courses specifically, the sales tax treatment from Module 5.2 can be different. Another reason to keep the buckets clean from day one. Let me walk 7 sample payments so the decision pattern lands. $500 single session, one-on-one coaching. $4,000 8-session package paid as a lump sum. One-on-one coaching, all of it at receipt. Cash basis from 10.1. $1,500 per participant in a group cohort, group coaching. $3,999 for an ACC training enrollment. Coach training, not coaching, because the delivery and the tax treatment are different. $400 a month individual supervision, $250 a month mentor coaching, separate from supervision, $2,000 workshop fee, speaking, 7 payments, 7 decisions, 20 seconds each. Mixed payments are where the categorization habit breaks most often, and the fix is split entry bookkeeping rather than a single lump sum miscategorization. One invoice covers a one-on-one package and a group program. A single payment hits the bank, say $3,500. Order route the whole thing to one-on-one coaching, and $1,500 of group revenue is sitting in the wrong account. Order route to group, and $2,000 of one-on-one is wrong. Modern bookkeeping tools, QuickBooks, Xero, Wave, support multi-line transactions natively. Break the payment into the component line items. Categorize each line done. The work happens once on the way in or many times on the way out at year end. The Stripe-metadata route is the automation that turns a per-transaction habit into a one-time setup. Each Stripe product carries metadata that integration plugins for QuickBooks, Xero, or Wave can read and route to the correct revenue account on receipt. Map each product once, ACC training enrollment lands in coach training automatically. A session booking lands in one-on-one automatically. Setup is one afternoon of careful product-to-account mapping. Ongoing cost per transaction after that, 0. Worth the setup time the moment your volume crosses 10 transactions a month, which for most coaches happens in the first year of taking online payments at all. Pull the revenue report for the last 30 days right now and look at the distribution across accounts. Does the distribution match what you actually sold? If the one-on-one coaching line shows 12,000 and you also ran a group program and a training cohort the same month, you have misrouted revenue sitting somewhere. Find it. Rebucket it now while you still remember what each payment was for. If you use Stripe and the integration is live, audit the product to account mapping. Any product without a mapped account is generating manual categorization work every single transaction it processes.